Hello, I'm Bernard Hickey from interest.co.nz and welcome to a special economic weather report brought to you in association with Bank of New Zealand. Today we look at figures on March quarter GDP. Now they're quite late. The earthquake on February the 22nd disrupted the Stats NZ collection of those figures. It has a big operation in Christchurch. But now we have the numbers, and they're actually much stronger than many people were expecting. GDP grew 0.8% in the March quarter. The market was only expecting 0.4%, and the Reserve Bank was expecting 0.3%. The Stats NZ also upgraded its numbers for the December quarter to 0.5% growth from 0.2%. Now, there's a couple of areas of the economy that are doing well. The manufacturing sector did well in the March quarter, up 3.6%. Real estate and financial services up 1%. Remember, we had that rate cut on March the 10th, and the market has picked up a bit since then. Machinery output was up. Some people think this may be because of the earthquake, people having to get machinery down to Christchurch. In fact, it's quite something that the economy grew 0.8% when we did have that earthquake, albeit in the last 6 weeks of the quarter. Construction, however, down 4.3% in the quarter. Residential construction remains at very low levels. Now, because this number was so strong, the New Zealand dollar jumped to a record high of over 85 US cents. That's because people saw this as stronger than most people were expecting, and that means the expectations are that interest rates may have to rise a little bit sooner, because this could increase inflationary pressure for the Reserve Bank to deal with. Wholesale interest rates rose about 5 basis points, and questions surround when the Reserve Bank will next hike the official cash rate. Remember, it's at record lows of 2.5%. Economists are now saying that the most likely increase will be in December. But there is the rising possibility of a September or October increase in the official cash rate. Now, previously people had said the first hike is likely to be 25 basis points. Some are now saying, because of the strong figure today, that it could be 50 basis point hikes. Now, all of these things depend on quite a few things happening in the next couple of months. We don't know exactly how the whole European debt crisis will work out, whether the US debt ceiling will be raised, and whether there'll be some more ructions on international financial markets which might slow the economy down. But it does mean that expectations of interest rates have increased, that we're more likely, it seems, to get an official cash rate increase in December rather than January, and that it may be that interest rates rise a bit faster than some people had expected. Now, that's what the economists say. Myself, I'm a little bit more cautious. I think there is a possibility that the Reserve Bank doesn't increase the official cash rate later this year. And then when it does increase it, it'll be slowly. Remember, we've had a sneak preview of increased interest rates. The Reserve Bank did this last year. It really kicked the economy in the guts, and it had to reverse it, albeit after the earthquake on February the 22nd. I'm Bernard Hickey. That was a special economic weather report brought to you in association with Bank of New Zealand.